So now we'll move on to deductions from gross total income, advance tax, TDS, and filing of tax returns. Some important provisions relating to these sections will be covered in this video. To start off with Chapter 6A deductions, Chapter 6A deductions starts from ATC to ATU. The 5 heads of income plus clubbing minus set off and carry forward of losses will give you gross total income. Now from the gross total income, if you deduct deductions from ATC to ATU, then you are going to get a taxable income. So basically a country like India where there is a lot of incentive for savings and where the people have the mindset of savings, the government wants to further encourage, and that is why you have ATC to ATGGC providing deduction in respect of certain payments. So in order to ensure that the industries are going to be created in all areas, you have reduction for certain incomes. So starting from ATI to ATRRB. So apart from this, ATU provides for reduction in respect of physically handicapped and mentally retarded people. And the first part of the section is ATA and ATAB, which provides for 2 points. The deductions under this chapter cannot exceed the gross total income of the SSC. So likewise, if a firm or AOP claims deduction, partners or members cannot once again claim deduction for the same income. So those are a couple of important points and the general introduction about Chapter 6A. So ATC is basically provide deduction for LIC premium, etc. Deduction is available only for individual and HUL. So what are the main payments which qualify for deduction? So first one, LIC premium in the life of individual, spouse or children. So in case if the premium paid exceeds 20% of the sum assured, then excess of premium paid will be ignored. To illustrate, suppose if you take a policy for 1 lakh and make a payment of premium of 30,000, you can claim deduction only to the extent of 20,000. So you can't get the full 30,000 of deduction. The most important point, what you should note in the case of an LIC premium, you can take the policy in the name of the individual, spouse and children. There is no requirement that children must be dependent, and it's also very important to note that if you take the policy in the life of the parents, you don't get deduction under ATC at all. Moving on from insurance policy to the next one, NSC 8th issue, including interest accrued on NSC 8th issue except year 6 interest, because after the end of the 6th year, the entire amount is paid along with interest, therefore you don't get deduction for interest accrued on NSC for the 6th year, because it's only a 6-year scheme. Last year you don't deem to reinvest, it's actually going to be paid to you. So contribution to RPF, SPF, PPF will also be eligible for reduction. Then principal repayment of housing loan will also be eligible for reduction under ATC. It should be noted that interest will be eligible for reduction under 24B, principal comes under ATC. But one more striking difference in the case of ATC. So principal amount repaid will be allowed as reduction provided if you borrow from certain specified institutions or employers, whereas you can claim reduction at 24B for borrowing from any person. Now again another important point which you need to note here. So after getting the completion certificate, if you take a loan, then such principal repayment will not be eligible, whereas in the case of 24B, you can continue to claim deduction in respect of interest on capital borrowed for purchase, construction, repairs and renewals also will qualify. So these are some of the very important difference. So ATC principal, 24B interest. You have to borrow from certain specified institutions for ATC, it is not the case in the case of 24B. Once you take the completion certificate, any loan taken after that period is not eligible for ATC. Like so you can't claim for repairs or renewals or ATC, which is not a detriment in 24B. You can claim reduction even for loan taken for those purposes also. So moving on, so the next important point which you note is the fixed deposit in banks. So if you take a fixed deposit in banks, which is a notified scheme, 5 years or above is what you should be the locking period here. In such circumstances, you can claim reduction under section ATC. If there is going to be a cumulative deposit, interest will also qualify for reduction under ATC. So these are some of the major investments which you should watch out for in ATC, NSC, PPF, LIC premium, PF, so on and so forth. A lot of other investments are there which are generally not going to be that important from an examination perspective. You can go through my textbook and have a small look at it. But I am only covering the major areas of investment, which is commonly asked in the examination. Moving on, 80CCC, which 80CCC provides for reduction in respect of pension policy. Reduction will be the amount paid or 1 lakh, whichever is less. So the reduction under 80C or 80CCC and 80CCD should not exceed 1 lakh as per 80CC. So therefore the maximum limit available for these three sections put together is 1 lakh. Apart from this, there is a new section which is introduced in the current year, which is 80CCF, which provides for reduction of 20,000 for infrastructure bonds. So this is over and above 1 lakh, and this is reduction available exclusively for infrastructure bonds issued by notified institutions. So bear in mind, this being a new section, it will definitely be there in the examination. It's 20,000 is over and above the 1 lakh which talked about in CCC and CCD. Moving on now to D series. D series are by and large health insurance or more medical or health wise. The first section of this last is 80D. It's available for medical insurance premium. The premium should be paid by any mode other than cash. You can take the policy in the name of individual, spouse, dependent children, parents. Second most important point, in this section children must be dependent and parents are also covered, and it is not necessary the parents must be dependent. So the reduction is going to be, in case the policy is for individual, spouse and dependent children, you will get 15,000. For parents you get additional 15,000. In case if any of these persons are 60 years, 65 years and above resident in India, that is they are senior citizen, 15,000 gets replaced with 20,000. So therefore there is a possibility of going up to 20 plus 20, 40, or there could be a possibility of 15 plus 20, 35, or there is also a possibility of 15, 15, 30. So what you need to be very careful here, bifurcate the policies like this: individual, spouse, dependent children, one set, maximum of 15 or 20. So parents, maximum of 15 or 20,000. So medical insurance comes on such a regular basis in the examination. Watch out for this one more time also. So 80D is available for both resident as well as non-resident. But as you go to the DD and DDB, which are basically for medical expenditure on treatment of physically handicapped for 80DD, respect of certain specified diseases under 80DDB. So the distinguishing factor between DD and DDB, in the case of a DD, should be for physically handicapped or mentally retarded dependent relatives, whereas DDB is basically for treatment of certain diseases. Apart from this, in the case of DD, you get a flat reduction of 50,000 or 1 lakh depending upon whether the disability is severe or not. If it is a severe disability, it will be 1 lakh. If it is not a severe disability, it will be only 50,000. But in the case of an 80DDB, reduction is going to be based on actual expenditure or 40,000. But however, the treatment is in the health of a senior citizen, then you can go up to 60,000. But there is another interesting point in the case of DD. Whatever insurance claims you get is not going to be deducted, whereas in the case of 80DDB, it is going to be deducted from 80DDB. So that is, if you claim, if you already have a reduction of 60,000, you get an insurance record of 30, your reduction will be finally only 60 minus 30, 30,000. Both DD and DDB are not available if the other dependent claims deduction under section 80U of the Income Tax Act. So watch out for this. There are very important sections. Sections are available only for resident, and you should also know the distinction between DD and DDB, which I have just now discussed. Moving on to the next section, 80E, which is basically available for education loan. So interest on education loan can be claimed as reduction. So you can claim reduction for a period of 8 years, starting from the initial you start repaying the loan. So the scope of this section has been now widened, so you can take education loan for any purpose above your higher secondary or secondary school level. So that's the only condition. The education loan can be taken for individuals, spouse, children. Even guardian can claim reduction under section 80E. So again, watch out for this because a couple of amendments were made in recent times. So therefore 80E should be a section which should be watched out for pretty closely. So moving on from 80E, the next very popular section, 80G. So in the case of 80G, you have to classify the donations into 4 categories. Donations qualify for 100%, reductions also 100%. Reductions which qualify for 100%, reductions 50%. Donations which qualify with ceiling, eligible for reduction at 100% and eligible for reduction at 50%. So A, B, C, D and category. This 10% ceiling will be or both for C type of donations and D donations. So it's easy for you to list out the second list, which consists of only 5 donations, of which 3 of them are easy to remember. Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust, Rajiv Gandhi Foundation. So therefore you cover 3 out of 5 with the Nehru family. Then the other 2 are going to be National Children's Fund and Prime Minister's Broad Relief Fund. So in the case of all other donations, you find Prime Minister, Chief Minister, National Defence, then you can always go for 100% under list A. So in list C and list D, generally we pick up 1 donations. List D will be donation for promotion of family planning, whereas D will be for approved charitable trusts, temples and so on and so forth. The only point is that both C and D put together, the maximum qualifying amount is only 10% of adjusted total income. So that the adjusted total income is nothing but the gross total income less ETC to ATU other than ATG. Since long-term capital gains and short-term capital gains under 1 level A are not eligible for Chapter 6A, we also reduce the same before arriving at the qualifying amount. So once you arrive at the qualifying amount, then you can apportion between family planning and charitable trust. First allocate to family planning because it's eligible for 100%. Balance donation penny, you can go for 50% reduction. So this is about ATG. So moving on from ATGG to ATGG. So reduction under ATGG is available for rent paid. So basically, if rent is paid by an employee, he gets exemption under 1013A. So for employees who are not in receipt of HRA but paying rent, and for business people and professional people, this ATGG will be applicable. The amount is very small, but again it's a good surprise question in the examination. The reduction will be least of 2000 rupees per month, 25% of adjusted total income, rent paid minus 10% of adjusted total income. The adjusted total income will have the same meaning like your ATG, except instead of G, substituted with ATGG. Rest of are the same. So then donations to political parties are eligible for reduction under ATGGB and ATGGC, which is to the extent of 100%. Similarly, under ATGGA, you will find donations to scientific research associations get 125 or 170% reduction in business income. If you are not a person deriving income from business, donation to such institutions will be eligible for reduction under ATGGA, but the only small rider you will get only 100%. So if you analyze the G series, except for rent paid, all of them are donations. If you look at D series, all of them are primarily for medical. So this is how normally the classification is done. Now, so if you go through these sections, this should be fairly sufficient from your examination point of view. Thank you.